real estate has done well for the last 30 days, but I would caution you that I want to make money every year for a long time. And I want to each year get better and make more money over a long period of time. Real estate doesn't have a great track record of having just expansive appreciation. If you look at real estate, right, it's having a good month, it's having a decent year, but over the 5 year, it only has a rate of return of 19%. Whereas healthcare has a rate of return of 162%. And that's with a couple of down years overall in the healthcare space. You have technology with 546% rate of return, consumer discretionary and consumer services being a higher rate of return. So it's almost like, it's important to keep near-term objectives kind of clear. Like, hey, I'd like to buy into this, but my exit strategy is going to be this or that. For example, if we go into a recession, it would be a good idea to buy into some safe stocks, but make sure you define your exit strategy. I'm going to get into this stock and I'm going to track the recession. When I see that the economy is going to grow, I'm going to get out of that stock and start getting a better position into growth. Okay. I'm going to rotate out of this into that. The mentality, and I know that in principle, like Warren Buffett is an example, or even Charlie Munger, they would say, you buy and try to hold forever. Totally get that. If you buy at the right time and you have a company that just has great growth over time, why would you ever sell? Acknowledged. But there will be some investments where you're like, hey, you know what? It's going to be an investment with this type of horizon. Bonds are a really good example. I buy a bond. It may have a 1 year term, 2 years, 3 years, 4 years. It has already predefined exit strategy. In 2 years, the company that issued out that corporate bond is going to return the face value of that bond to me. Exit strategy has been defined. Stocks is harder because it's really on you. You need to decide at what point in time, what would I need to be seen in the market in order to get out of that stock? So those are the things to think about. Is if you're going into real estate or utilities, I would encourage you to define that exit strategy. Like, okay, I'm getting into real estate because I think it's a good time to be in there. It serves this purpose in my portfolio. It's going to generate income. It's going to do this and that. And these are the conditions that if they existed, I would get out of that stock.